I believe we are back, so hopefully you were patient for a minute there. Yeah, we had a Friday like this a couple of weeks ago where everything was crashing. So hopefully this it only did it once. For some reason, CPU capacity is about 83%, which is pretty high. I'm not sure what's going on with this current broadcast. Anyway, what I was saying is these new objectives were generated just this week, which are 2087 min, 2139 to 2171. That's about another. It is not about. It is 100 points. So that is going to be another 4 or 5%, I guess, right, Mitch? Wouldn't that be about right? 100 points on a 179 index, on a 1900. Yeah. So a percent would be about 200. So yeah. So it'd be about or 10% would be that. So anyway, we're looking at about a 5%, 4 to 5% potential gain. We've got to get above this to confirm these numbers. We need to get a close above this 1985.60 on a weekly basis, and I guess we could still do that. That'd be no problem. Just a little rebound here. I'm not sure exactly what's continuing to drive this market or lack of. Earnings is, like I said in the beginning of the week on commentary, is that earnings was what this week would be all about. And as I mentioned earlier, Amazon and Visa were the two big disappointments. The banks actually that reported were fairly good, and on balance, the earnings are fairly good. And that's just because expectations are so terrible that it's not hard to look good, I guess. Was it the prettiest girl in the ugly girl contest or something like that? So, looking at the monthly graph, we're continuing to see the same type of information here. I'm going to come off screen for a second. Just, 162, 160, and 108 on PPM 1, 2, and 3. So very, very robust monthly trends are still in play. We're not even seeing the beginning of these contractions. Now, one of the things that has happened, bringing up the data screen here, if I can get to the right number, the target zone for this is 2035. So I mentioned that number a couple hundred times in the last few weeks, and that's continuing to be the min objective here on the monthly. But then all of a sudden you get into the 2116. So now all of a sudden we're generating those same numbers that the weekly is starting to suggest. So we're getting these clusters, we're getting these Fibonacci clusters and these ranges. This is the same thing that happened at 1904, 1960 levels, if you recall. We've achieved all those goals. So they tend to, when I get these multiple level charts from monthly to weekly and even daily, you see that these clusters tend to be satisfied more than not when you have multiples coming. Sometimes you'll see a big, maybe the monthly or weekly, the only chart that's coming up any higher objectives, and the patterns aren't suggesting they're all going higher. Right now we've got there's no current daily patterns that are being demonstrated on the software, but there is intermediate, which would be the weekly, and the long-term, the monthly charts are continuing to suggest that. And these have been the charts that for some time have been really dominating where this market's going. The short term has been very, very difficult from a day-to-day basis or even from intra-week. I guess I think we printed the S2 number on Monday, wasn't it, Mitch? When we did that, I think it was right there.
Yeah, I'm just taking a look.
I think it was that Monday that we had that. But I did realize since we crashed, I no longer have your video up. So anyway, we'll go ahead and try to keep some things going here. It's always fun when things crash, because you never know what kind of new dynamics you get for the show here, right, Mitch?
That's right.
Yeah. So we got his voice here, and I'm actually while I'm talking here, just for a second, just in case I want to bring him back up, I can bring bring him back up on a couple of these screens here, and that will be easy for me to do, actually, since I've already achieved everything I needed to do here. And so we'll be back here, at least be able to be on screen. Anyway, yeah, sorry, it's a summertime blues. We're gonna have to come up with some kind of entertainment. Maybe we'll have a musical act come on sometime. We'll have somebody come and play acoustic guitar or something. But it's really, gosh, I don't know what we'd be doing if we were doing these 3 times a week like before. There's just not the activity. But the trends on the intermediate and the monthly are still very, very positive, and there's really nothing to say, but that's what they are, and they're just sort of like watching paint dry, but they're going in the right direction. Assets in general are appreciating, and that's really what you want. Excuse me. So anyway, let's move over and take a look at the futures charts. I thought there's 2 charts I'm going to take a look at, and you'll see that we had a cycle low come in spot on here just a little bit ago. We should have the market moving up probably close to into the last hour or so. This is what it looks like to me. So it does look like from a short-term basis we've got a recovery on the way. On the 24-hour hourly graph, we also had a cluster come in the cycle came in about an hour before the low happened, and we got one of these what I call these volume clusters here, where you see an increase of volume. It usually has a tendency to suggest that there is a turning point occurring here. So moving back toward the magical number I talked about earlier, 1985.60, is certainly a possibility. We'll see if they can hold them in the close or if they can get back that far. Don't think there's really anything real that is that should keep the markets or people from coming in and buying. If Amazon is the only driver of the market right now, we're probably all in trouble. Although I think I know Mitch and I both are big Amazon Prime guys, so there's I couldn't live without Amazon. So that's I very seldom go to the stores anymore. That is my store, and that's how they want it, I guess, right?
Yeah. I stimulated them today with a purchase of a hard drive.
There we go. Yep. Well, I got the new Fire phone going and all that stuff. Yeah, I think from hopefully we have some good stocks to go through and stuff today. But from this market standpoint, it looks like from an intraday, we have probably seen the extremes for the day, and we're going to see a rebound into the close anyway. This next cycle on the hourly won't hit until Monday sometime, so that's a ways away. The other thing I wanted to look at was this international spread chart. So we have the EFA against the S&P, and it continues to make new lows. In spite of today's downturn, we're still looking at at these patterns that are suggesting that the market's still outperforming Europe no matter what happens, even when we're going to and we're going down or up. It doesn't matter, I guess. So that's always nice. I was just bringing up the to see what the indices had done overnight as far as Europe goes. I didn't really pay attention. Down 0.5%. The DAX, the German market was down 153 last night, 182 on the CAC Quran. That is the French market. So they had a pretty rough night over there. I'm not sure what was driving. I guess sanctions sanctions on Russia makes German markets go down. So that's what the story is. Hard to make sense of some of this stuff because I guess everybody's trying to struggle to make some sort of sense out of this. I think I've got, I put up a screen that we got both of us on. I'm going to take us off the screen. You'll see that this chart continues to go down into a massive hole, and it's been doing this since, this is from '09 to current. So this is a weekly differential chart. It's a ratio chart, and it's the same thing. We saw a little blip. This is on EEM. We're seeing it stabilize a little bit. The emerging markets are starting to stabilize a bit against the S&P, but not a lot. You can see we've had elements before where it'll turn up a little bit at some point, and I've been talking about this. I believe this will be the first signs when Europe starts to act better than we do, that maybe there's a real turn in the market, because the way it might act better is that we're going down faster than they are. That will be the sign of the end. I still think, based on the trends and things that we looked at a few minutes ago, that's not really a possibility as far as that happening right now. There could be some corrective phase start, and maybe, like I said before, maybe we get the same pattern that's unfolded at every even number. We got up to 91.39 for the high this week. My bet is we probably see that 2,000 next week. I thought it was this week, but we'll see. And I do believe, like I said, Mitch, if you went to Bloomberg and brought up the economic calendar, they'll show us what's on there. Maybe we can discuss that before we move on to some other things here in a minute. But I think there's a fairly heavy schedule coming up next week.
Let's see. Next week we got the pending home sales on Monday with the PMI. I got the Red Book on Tuesday with the FOMC. Jeez, I can't even talk today. FOMC meeting. What else we got on the calendar?
That sounds like this week, actually.
That's next week.
Is it? Okay.
28th. Yep.
All right.
Week of the 28th. Chicago PMI on Thursday. And then employment situation on Friday.
Yeah.
Beginning of new month. So
yeah,
along with consumer sentiment, manufacturing index.
So that'll be the big number. We'll be talking about unemployment
Friday
next week. That'll be the focus. And then I know there's a ton of earnings coming out again.
Yeah, a lot of the stocks that I have this week, pretty much all of them released earnings, including Amazon and Visa.
Okay.
And so we'll be talking about a lot of stocks, fortunately, we don't own. So, because they were all disappointments this week, it looks like.
Well, that's a good sign, right?
That's right.
So I'm going to go back and let's take a look at what I want to do is go back and we'll take a look at our market that I don't think anything has been going on. It's been below the radar screen here, but it's going back to looking at the 10-year. And I hate when that thing updates like that. It's not supposed to be linked, but it was. So anyway, the 10-year is at 247.8. So we're back at that in the 240s on the 10-year. I guess it's been a flight to quality. It's really, really tough to tell. I mean, the airliner incident last week. I don't know if anyone wants to fly international anymore. What was it? Algiers or somebody lost a plane. Another 777, by the way. I think they were. This is the third one. All three of them have been like big planes, so flying international flights. So Boeing. I don't know if it's Boeing or I guess Boeing didn't cause the plane to get shut down, right? But I think that plane that was lost, the Malaysia plane, was a 777 that was flying to China, I think, that time. But anyway, yeah, I'm not that thrilled about going on an international trip right now. But the interest rates, I guess there's a cash flow coming in here. We're continuing to see these bonds get stabilized. I think we talked about it when we went through the only thing that we backed off on from a VPM standpoint when it comes to the bond sector is really the muni bonds. Everything else is pretty intact. We've got corporate and government bonds continue to be very, very strong and continue to have good trends in those markets. So we haven't seen a turn yet. And obviously with treasuries moving back to 240, we got up to around 270 here. I think the range was 260, just looking at the high here. We got up just around 265, 268, and then we backed down 20 basis points. Not a big deal. It's something to talk about, though, I guess. And then, of course, we've seen if there's all this international stuff going on, why isn't gold doing something, right?
Right.
And
yeah, gold hasn't been doing what everybody had hoped, and and what the gold bugs had promised it would do during this type of market.
Yeah. I've got another one. There it goes. Yeah, so this is monthly, but let's go into the weekly. We've had a trade on, I think, on 1.2 forever. I don't have 1.2 on here, but this pattern is a flat line, nothing going on. But I'm telling you, these flat lines end up to usually bounce about 70% of the time. 7 times out of 10, you can make a bet to own this, and it will come back up. I still think 1450 to 1500 is going to be a good number at some stage, and it sounds somewhat optimistic. Not sure what will trigger it, but the pattern says that's where it's going. These usually don't end up failing and going lower. When you get this, we're looking at a 1-year consolidation in this market, so it's not a lot there as far as that stuff goes. I just want to put. I want to get the S&P back on this screen and unlink this so we can. All right. I want this one to be linked. All right, Mitch, why don't we go ahead and get started on some of these stocks here.
Well, let's start with Amazon, since that was the big news item of the day. It's currently on the 3.2 weekly system. And as I said before, we're flat this security.
Yeah, down 10.3% right now. That's interesting. Don't even have a strategy on here. So let me add a strategy real quick.
We sold out of this back in March and have stayed out of it since then. And it's pretty much gone sideways, just in a very large range since that time.
Yeah, I've got all kinds of I put the wrong model on. I'm sorry. Sorry, folks. Sorry for the lull in action. Keep talking, Mitch. Tell us some more stuff.
All right. So this stock, let's see here. We sold out of it originally back on March 31st, and we sold out of it at 342. So obviously we've pulled back substantially since then. I think the lows back in May was 288. So we're not quite down to the lows on the year yet. But this is certainly putting us back towards that territory. We're right now at 321 on Amazon.
Yeah, I put the new VPM Market Mind on there, and I had the shorts turned on. At 342, it shows we reversed the trade. So we went from long, taking that profit, to going short and then taking another profit the other day.
Very nice.
So, yeah. So anyway, for those of you that we're getting really close, I've got a meeting at 10:30 my time this morning, hopefully to complete the final elements, at least from the software standpoint. Then we have some documentation to put together, and we should have the VPM Market Mind out for TradeStation fairly soon. I'm trying to make sure by August, by the end of, mid next week, Wednesday or Thursday's the end of the week, right? So next Friday is first day of August, which is one day from my birthday. So how exciting. Anyway, so this pattern has, as Mitch mentioned, I've got the, right now I have the shorts on. I just need to take those off, and I'll focus on this right now. But there is no pattern that is positive. While we moved up off an extreme low, we're back and setting down and coming back into this pattern. Most likely what's happening here, we see PPM 1, it's 0.73. Minus, that's a positive. On PPM 2 and 3, we're minus 59, which is clearly a trend down. I'll bring up these numbers in a second. And it's flat on the 40-week moving average, or PPM 3, at 0.5. So when we're looking at this from a trend, whenever you have a positive short term, a negative longer term or intermediate, that's a sign that there is no trend. It's in a consolidation range. So those numbers are easily the PPM. Let's see, we're at 328.54 is the PPM, or is the 21 period moving average, or 21 week moving average. So we're just below that right now, and we're at 329. So you have 329.33. You've got those averages are actually advancing in this pattern, and then you've got the 21 week still down at about a little bit more than 0.5% per week. So this stock's not going anywhere, certainly going down today, and it's not going to be reversing and starting to kind of trend out of this pattern. So there could be further consolidation, or we could go down and maybe set some further lows in this stock, in this market. And so as Mitch mentioned, we don't own it, so it's okay. So we are going to just continue to stay out of that one for now. I am going to put on the other models here just to put that up real quick here. Guess I still have the wrong one on. Okay, so let's go ahead, and what's the next?
Next one is Pandora. Ticker is P. They also reported earnings after hours yesterday. They're down substantially today, down around 13.5%. Let me pull it up.
Well,
right
I still
now.
have the shorts on. We were short. We covered it at a profit. Then this morning actually on Monday morning on the weekly, we went short again. We have a short signal here. Matter of fact, it's short at, what's the price? 24.85. We went short at 26.23 on Monday. But the so this is a similar pattern to what's going on with Amazon. Is that we had a big decline, and now we're seeing a rebound, and now a retest, or a potential retest of the lows. The lows in this pattern were 21.50 roughly, and so maybe we're starting to move back toward those lows in the same type of pattern. I mean, it's almost identical. I don't know if Mitch did that on purpose, but
we sold out of it a week right after Amazon. And we took a nice 236% gain on that trade, and we sold out at $28, so $28.75.
Right, and so yeah, we're looking at from the standpoint of the configuration. We're also seeing the same thing on the PPMs. We got a short-term positive positive 0.54, and then we have a negative minus 2.13 and a minus 2.8. So the longer term, intermediate and longer term averages are down, both in the intermediate is in a major downtrend. So if we look at what those values are, the market's going to have a hard time staying above this middle value, which is 41.33, which is light years above where the market is, and then the also the 40-week moving average is 44.72. So we're well below everything here. We're down 13.47. What did they do wrong? You know?
They actually beat expectations, but it looks like the big issues has been the user numbers. So not as many people listening in June. So they're concerned about the future.
I'm not helping them because I haven't turned on Pandora in, I bet, 2 years. So I used to use it all the time at our old house.
Are you a Spotify user then, or
I'm not an anything user?
Not anything.
I'm just my own music, I guess. So not that. I can tell you the headsets that they give you with the new Fire are amazing, and I have some expensive deals that some outfit out of UK makes I thought were impressive, and the little off-the-shelf, here you go stuff is better than those. I mean, they're pretty amazing. I was really impressed with those. So, but yeah, so let's go ahead and, matter of fact, I'm going to change this just because this has got, I want to look at the models that we have on here. Yeah, so let's go ahead. I'm going to change charts here. I'm actually going to link this one up, even though I said I didn't want it that way. It is now. And we'll go back. This will be better, and it'll reflect what we're doing better. What's the next chart?
Next one is going to be, let's do Visa. We're currently on the 1.2 system on Visa.
What is that symbol? V?
V.
That's
Yep.
what I thought. And you said it's 1-2?
1-2.
Okay. And we've been out of that one, as you said.
Yep.
And these patterns, this pattern is way different than the other ones. This has been the ultimate bull market. I'm going to bring up the monthly for just a second here, just so you can see this trend. This thing pretty much since '09 has just been going up and up and up. We're talking $43 to $213 over time. And when we look at the weekly trend, you can see we've been in and then we're out, back in, out, back in, and out. So we've had three different patterns that have emerged here, and the outs were just I'm not sure. Let's see what here we were out at 113, back in at 139, and then out at 172 and back in at
197.
197. Yep.
Yep.
Yeah.
We had a nice string of gains on that. The last trade, we're up 7.5%. Prior to that, just shy of 24%. And then going back to 2011, up 51%. So three really nice trades on that. All just, stair-stepping that up. The 2.0 chart looks really nice, just seeing that walk up, plateau, and so on. And we've done a great job of capturing this run up, as you said, going back to 2009.
Right. Okay. And that's remembering the goal of the capture 60-80% of the trends. That this has easily caught that amount with these three trades off of these lows. So, and it's not, I hate to get started, but it's not about buying it lower than you sold it. It's we got out, we recognized the trend, we recognized it was ending. It so happened that it didn't continue down, and we rebought it, and that's okay. Because each one of these trades what were the percentages? Do you have 2.0 up there? What were the percentages on the gains on those three trades?
It's 7.5%, 23%, we'll say 24%, and 51.5%. Okay. We've only had one losing trade on this. This was back in 2010. We took we'll say a 13% loss on that. Then prior to that, we had a trade of 25%, then 13%, and 10%. So we've had a lot of very nice, steady trades, in each one for 6 to 10 months at a time. It looks like.
Yeah. Just going to bring up 2.0 real quick here just to get that done. Of course, I don't have my password in here.
Yeah, as you said earlier, it's earnings were key this week, and every company it seems like that's been releasing earnings just has been missing to some degree, either directly in the earnings per share or in future looking guidance. It just has not been a very favorable week when it comes to a lot of these earnings releases, at least the major names out there.
Right. And I think overall, though, I saw something like 67% of the companies are beating. It's just these names that you get focused on. It's the same old, same old. You look at the big trees and then look at all the trees and looking at, what is it, looking at the trees instead of the forest or something like that.
Right.
But anyway, boring you with logging in. I'm not sure why I didn't do this ahead of time, but I didn't. Nice. It's one of those days, folks. It must be every other Friday, because last Friday was pretty good. We had a good show, but this Friday is not so much. There we go. So going back and just taking a look at what Mitch was talking about, I guess you were looking at how this thing. Visa had stair-stepped, right?
Yeah, if you go to the model results overview page where it shows the moving equity of this security, now as it's been managed, it looks really good. You see it stair-step up, plateau, and so on.
Yeah, so average win, I was going to guess, is probably around 21.4. Average loss is fairly big, actually, 1291.
Well, it's just the one trade, though.
Oh, that's true, right? Yeah.
Yeah.
Yeah, that's true. There's some one losing trade. And then got a win-loss ratio of 167. That's not bad. Average drawdown 4.1, not bad. But
Yeah, considering 7 trades, 6 have been winners, 1 has been losers.
Yeah,
That's not bad at all.
Yeah. Well, I guess we need more losers if that makes any sense to get the ratios better, so that doesn't look. Okay, good. I've got this up here now, so now we can reference that as well, so we can show you that stuff. What's next?
Next up is McDonald's, MCD. We actually sold out of this on Monday, and I think it was also on Monday that they had a scandal coming out of, it might have been China. One of their factories, I guess, was reported. Some video was released showing the workers taking food or meat that had fallen on the floor and tossing it to the machine. So,
nice.
Yeah, I had to laugh. You had referenced Chipotle being dog food on Monday, and I just happened to watch some of the some clips from Super Size Me on that same day.
Yeah.
And McDonald's. I just can't eat there anymore like I used to. Not when I was in high school.
I haven't eaten there for years. So this pattern, I mean, massive. Look at it. Let's see. I'm going to move Mitch's right in the way here. Let me move that out of the way real quick. Take us both off screen so we can see this. But you see the PPM1 is just diving here. We're minus 0.74. The other two are flat, but this is typical when you get this rollover. So my expectation here would be that we're entering into a fairly major trend. We sold out of it, as Mitch pointed out. You can see the sell signal there on the screen. We sold out of that on Monday, but and it's spiking down since then. So that's a good thing.
This is another great example of why you need to place the trades at open on Monday, because since then I think we're down about 3%.
Yeah. I tell you, when it comes to using a quantitative model, even myself that develop these and know what the signals are, I don't know them until they occur either. Okay, there's enough variables in the software that I've got to wait. I have had advisors ask me over the years, is there any way we could see if they're close to selling? I don't know what the point would be, but they're close, but they didn't sell. And I guess when prices start to fall, it's just the nervousness to try to maybe cut a loss less than what it's going to be. There's actually no way to do that, so it's kind of a silly thought. But you just when you see this stuff, when you see an exit, like Mitch said, you need to get these trades done. There's times when it's going to bounce after you do a sell, and there's other times where it's going to go down. And by the way, the stat is just on general trading is something like 85% of every trade that you ever put on will go against you before it goes for you. And what that is referred to in the quant world is adverse excursion. Otherwise, how much does it move against you before it goes for you? And because to not have that stat like that would say that you have the perfect system. You buy and it goes up. So if you had 70% of the time that it went up when you bought it, that would be good. There's a lot of folks that do some very short-term trading, including myself, and the percentage of winning doesn't really get necessarily higher. But if you're going to have usually if you have a high percent win, not always, you'll have smaller trades that are being generated. And there's nothing wrong with that, but there's a lot more transactions to get to the same place. From the standpoint of VPM and using this in a wealth environment, you want to have trades that look like this, where we win across maybe 7, 8, 10 months or a year or more, and so we can get to some tax efficiency, and a lot of that has to do with trends. You can see this chart has done pretty good at I haven't used my whiteboard today, so this will give me opportunity to scribble around on a chart here. Before I do, I am going to clean up the screen, get Mitch and I off the screen. And so the result is here. You can see these trades that have occurred, and they've overall done pretty good through. And this goes back to 2011 over here. So, they've had some nice gains. This stock actually does pretty well as a trading stock. So, there's a number of ways we've seen you folks build portfolios over time, and one of them is to even have core strategies. You have a list of stocks that don't change no matter what. Then you have another list that rotates, and we've seen it done that way. Or you can do it 100% rotation or potential to rotate as the fundamentals change. But we've also seen good solid strategies where there's a core group of stocks that you feel represents the economic mood or the economic flows of the time, and then change those things maybe very seldom versus the ones that you're screening for. But yeah, this stock actually acts pretty well actually from that standpoint. So let's move on.
All right, let's talk about Dollar General. Ticker is DG. We also had a sell on this security this week. And this is sort of an interesting stock in the sense that we bought in it back in June, I think June 16th, and bought it not right at the highs, but towards the highs, I think, for the year.
There was a little breakout of that pattern here.
Yeah, there was a nice breakout, and shortly after we got in it, the CEO announced that he was going to be retiring. And that's one of the... It doesn't happen every time, but I thought this was a pretty interesting example of a stock that when a CEO announces his retirement, it just fell apart that day. So even though he's not even leaving until next year, I think May of 2015, but that news dropped it 8%, and really ever since then it's been sort of struggling to keep up afterwards.
Yeah, I don't know. Was he one of the original founders or something? Or
I don't know. I don't know enough about the company itself to answer that one, unfortunately. But.
Yeah. Okay. Well, I guess looking at this stock from this view, it also. Let me see if I can squeeze this down a little bit. No, we don't have enough data here on this this stock. I guess maybe I can go back a little further. TradeStation has an issue that VPM software does not, is that if it doesn't have enough seed data, it has to collect enough data to be able to calculate the I guess all of the indicators to be able to run the system. And VPM has got a unique ability which to seed data to make it work even on a stock that's been around for 1 week. So it's one of the unique things that we built in the software way back in I think it was 93 or 94 when my original partner Dave and I came up with that. And I actually have to I say Dave and I, it was Dave. We were looking at some stuff. I always told him I'd give him credit for this because it was brilliant. And so we're continuing to, I got to keep that promise because I did promise him that was like one of the most brilliant things that come up with, because that's the thing that everybody struggles with, is how to calculate indicators before there's enough data, and we figured that out. So I'm not going to give out my secret on live air, so we're going to leave that as a proprietary secret. But it was good stuff. But this pattern that Mitch was talking about, there was a breakout. I don't know if there was some news or something that generated the breakout, and then as he mentioned, shortly after that, the CEO resigned, and now we've just kind of went into a flat line where 0.35 or 0.2, 0.35, and 0.14, minus 3.5 and minus 1.4. So we're in trend mode on the intermediate term from that standpoint. Just brought up the data so you can see that, and that data is we're looking at $57, so we're a couple about $1.25 below that average, and then 57.90 is also. So you've got a cluster, 57.44, 57 even, 57.90. All three of the moving averages are at the same point, which is a convergence point. And if the market could make a new low, then this would set the trend for a much lower prices. And I think this stock has always played out as a bad economy stock, right? Everybody's running down to Dollar General, and if indeed the economy is getting better, not because of housing, we know that, but it is improving. I guess more people have jobs, which is good, even though many of those jobs are part-time, or certainly folks are underemployed anymore than they have been in the past. And then the rest of them just said to heck with it and stopped looking for jobs. So that's why we're at the percentage 6.1%, because so many people dropped out of the labor market. It just doesn't matter there. So, okay. So not a lot on this stock other than we're out. It's done a pretty good job. I know we would have bought this in here somewhere. Matter of fact, let's just bring up VPM. Was it DG? Let's just take a look at DG here real quick.
Yeah, we've had a couple pretty nice winning trades on this. The more common stock as far as competitor would be Dollar Tree. That's a lot of advisors have used over the years, but this stock, this last sell on Monday was the largest loss we've had at 8.6%. Prior to that, we had a couple pretty nice size gains through 2012 and 2014, as you'll see here when we pull it up on the screen.
Yeah, I've got it right now. I'm just I'm going to bring in the middle of the screen here. You can see we had 0.6, and then 39 and a 20, and then this -8. And overall, it's not been a great stock, but it's up out of 8 trades, made 53%. And I tell you folks, while I'm sitting here at the moment, I got to do this trade impact chart. You guys got to look at this stuff. We can kind of see how many hits we're getting on this. 105 views of this particular one. Not impressive, folks. You guys, we got some really cool stuff for you to look at, and this gives you a lot of perspective. These are great presentation tools for how our system works and what you're doing for your customers. And I think everybody just, maybe it's that summertime blues. Maybe I need to bring up that screen and play the summertime blues again. But it really is. This is good stuff. Mitchell put this stuff together, did a great job, and it's just there's so much information here. But especially being able to zero down on individual stocks and all that. And I know we don't have it for everything. Our goal is someday is to have it for a lot of different things, and we're working on several projects in the background. But
that's right.
Anyway, so sorry to digress a little bit. I think it's important. I guess it's somewhat frustrating when we see we have all these really cool stuff and people don't look at it, and especially since it's so helpful in understanding exactly what's going on. Especially for the client that thinks you should win every time,
every
all
single
the time. And actually, we have some of those ourselves, don't we?
Yeah. Well, Dollar Tree, I wanted to compare and contrast these two dollar store companies.
Yeah, what's the symbol on that one?
DLTR. So its company operates in the same space, obviously. This one has been publicly traded a little bit longer, going back to 95 versus, was it 2008 in the case of Dollar General?
Yeah, and it's still open.
Yeah, and in this case, we're still long this position, currently down 4%. But you can look at the trades on this. We've done a great job over the years with this particular security. But you'll notice the average winning percent on this is only 30%. But what it comes down to is having some enough gains when you're making money to offset any of those losses.
Yeah, you got a 2.56. You got ER ratio of 125, which isn't great, but it's positive. And
right.
you gained 200. You did 23 trades and made 296%. So, what is that a course over? Yeah, so you could only have. I guess if you could pick a stock and just do one stock and forget diversification, you could have made 263% on your accounts just by trading this stock, which obviously you wouldn't do. But there's a lot of examples of when you're looking at these things. I'm bringing up the trade log. This was a much better choice by our community to choose this stock, no doubt.
Yep. And really, a lot of advisors I've seen started using this right when the crash happened back in 2007, 2008, and it's done phenomenal since then, especially as a lot more people became cost conscious and started shopping at these type of stores as opposed to going to the default Target or Walmart stores.
Yep. I've actually never been in one. I don't know.
I've been in a Dollar Tree a couple times.
I've
Great
seen the
for
Dollar
sand
General.
toys for the kids, but you're a little bit past that.
Yeah, I am. But yeah, I've just never. I don't think I've seen Dollar Tree. I've definitely seen Dollar General around. There's a couple, and you're heading up in the mountains here in Arizona. You have some of those. All right, so let's go on.
Next on the list is Nu Skin, and this is another company that's fallen from grace. Ticker on this is NUS.
Oh, that was in use. So hang on. Let me try that again. NUS.
Yep.
Another one of those pyramid deals like Herbalife. I'm surprised that Ackerman's not beaten on this one too.
Well, I think they're still undergoing a class action lawsuit for investors as far as the financials that they were reporting going back to the end of last year. It was just too good to be true type situation.
Do I have the right model on this here?
It should be 1.2.
Okay, I think that's right.
So yeah, back in January of this year.
What a
I
shame.
believe
So we ended up getting knocked out on this collapse, huh?
Right. Yeah, it's just one of those cases where out of the blue, they found out that someone had been cooking the books, it looks like, and so what it had been trading at wasn't necessarily real.
Yeah, I
And
just brought up the daily graph here, and we sold out about 6 days before the collapse on a daily, but obviously if you go to weekly, that's not what happened.
right.
You stayed in one day too many. And that's going to happen from time to time because you get, especially on fraud. Fraud's hard to detect ahead of time.
Now, to be fair, we sold with a 90% gain when it was still all said and done
Yeah.
from when we first got in it. But yeah, it wasn't nearly as high as the what was it, the 140
Yeah,
mark
right.
Prior to that,
Right.
thereabouts.
Yeah, and it responded quickly to that on that bar, and that's going to happen when you slice and you get the waterfall effect. So we're 1 minute away. We had way too much.
Oh, wow,
fun
yeah.
here. So yeah, we're having fun. I hope you guys are. Summer is interesting. It's always interesting to see what happens here in Scottsdale because yesterday was 111. They've cranked it up pretty good actually, and it's like 10 o'clock in the morning here right now, right? And that's only 93. So what the heck? Last night at midnight it was 100.
Man.
So it just didn't cool down. It's been, but it's one of those things. So what else to talk about in summertime blues but the summer weather? And anyway, those of you that are on vacation, sitting on the beach on your iPhone watching us, enjoy. And we'll be back on Monday. Just real quick, the market is still staying under pressure. We've seen a little rebound while we were talking here, not a lot. We're still 79.73 on the S&P, and industrial average is down 122. So it still looks like to me that we're going to move up into the close. So that's going to do it, folks. Thanks again for having the time to I guess watch us, and hopefully you got some benefits out of this today. So thanks again. Have a great weekend. Talk to you on Monday.